Hello everyone, I am Pratap here. We are at part 4 of lesson 21. In this lesson, let us discuss about price action clue rejections. And I also observed many of you did not notice we have released one more video during the last week that is about NeoStock's HLQ zone strategy. Last week I have released two lessons. One is different category of high liquidity zones, that is on last Saturday, and last Sunday I also released 3 videos related to NeoStock's HLQ zone strategy. If you look into the playlist, you will understand. All the 3 videos I have released on Sunday, during the last Sunday. And many of you are aware that we have released this video on Saturday. Because you might be thinking, I am releasing videos only on Saturdays. That is not the case. If I get time, if I am able to complete my presentation, I will be recording the video. Last Sunday, 3 videos I have released. The first video, lesson 21.3.1, is about NeoStock HLQ zone strategy, the complete theory and all the steps explained here. And remaining 2 videos are the examples, practical examples. And this is the most recent video. And see, some people directly jumped into this lesson 21.3.3 and watched that particular video, just ignoring this. See the view count, I can clearly understand. See, during this 1 week, 170 members looked into this video. But see here, 245 views. Almost 70 plus members watched this video by ignoring this strategy. Without learning the strategy, if you are looking into the example, you will understand many important points you will miss. Because every point is not possible to cover in the practical video, because here you might be having 10 different scenarios in the theory. Maybe one of the scenarios you may see in a practical example. In another practical example, you may see another scenario. And the remaining scenarios explained in the strategy may not be seen in these examples. So that's why theory is very, very important. First, complete lesson 21.3.1 and then get into lesson 21.3.3 or 21.3.2. So this is one important point, because all these things we are discussing because of this NeoStock HLQ zone strategy. If you ignore the strategy and without perfection, if you learn the other lessons, there is no meaning. Okay, now let's get into the session. And one more point, all these lessons are having a dependency on the earlier lessons. In case, if this is your first visit to our channel, please understand, we are providing complete free training on supply demand zone price action course. All the training lessons are available at our channel. I also kept all the videos in a playlist, supply demand zone price action course. All the videos are available in this playlist. I also provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. And this is the most powerful price action concept. And also, it is a highly expensive training program. Some of the US institutions, they are charging $8,000 for this course. Today you are able to learn all these lessons with a good quality from our YouTube channel. And one more point I want to tell to our members, because one of the reasons why I noticed you did not look into this previous lesson, NeoStock's HLQ zone strategy. The reason is you are not regularly following our Telegram channel. If you might be following the Telegram channel, you might be knowing each time what is really happening, what kind of videos I am releasing on every day or on every week. So that is the reason why I request all the members join in the Telegram channel. Some people join and maybe your schedules are very busy. That could be the one reason. Once in a while, you are looking into the content in that channel. But sometimes some important lessons you will be missing. I want you people to learn all these topics in an order. I don't want to jump some topic lessons and get into the next lessons. If that is the case, there is no meaning for learning all these videos. I also provided the link to our Telegram channel in this YouTube video description. So please join in that channel. Okay, now let's get into the price action clue. Rejection, it is a very important concept and a very powerful concept. So what is rejection? Rejection indicates a strong price wicks of a candle. If you are thinking from the candle point of view, after that we will look from the zones point of view. If you look into a candle might be having a long wicks. And how we can observe these long wicks? Either coming from the top, that is called upper wick of a candle. Look into this candle. See, at one point of time, the price went up to this level. Probably this entire candle might be having a body until this area. And after that, prices are coming down, and finally closed here. Forget about the color of this body. It could be red color or green color. We don't bother. But what is more important for us? To understand at some point of time, prices went up to this point and after that again it came down. So what could be the reason? That is what you need to understand. So by looking into the candle, you are getting a clue. Something is happened here at the top of this wick, upper wick. And also you will be seeing coming from the bottom also. You already learned rejection indicates strong price wicks of a candle coming from the bottom. See the next example. See, at some point of time, prices went down up to this. Probably when prices reached this level, you might have seen a very huge drop candle. A red color candle you might have seen. But after that, what happened? Prices again moved up, and finally closed here. That way we got a strong price wick in both these candles. One is the upper wick and another one is the lower wick. And these wicks are looking very strong. Even bottom also we have wicks and here also we have a wick. Why we are not talking about bottom wick of this candle? That is the lower wick of this candle. Why we are not talking about upper wick of this candle? Because they are not strong. They are ordinary. But these wicks are here the upper wick and here the bottom wick in the second example. They are special. The reason is they are looking very strong. Because they are looking very strong, we are talking about them. We need to find the reasons why they are very strong. If you can able to find those reasons, this is going to be a price action clue. Because we are learning price action concepts. So one of the concepts in the price action is price action clues rejection. Rejection is a price action clue. Okay, now let's learn more about these rejections. Rejection is also called as a price rejection. Price rejection away from the zone is a strong price action clue. What exactly the meaning of away from the zone? I'll show you with an example. And one more point, price rejection away from the zone indicates a strong order flow. It is a price action clue. The price action clue says there is a strong order flow in that zone. Look into this example. And one more point, price rejection plays important role in NeoStock's HLQ zone strategy. The previous video, we learned about NeoStock's HLQ zone strategy. Actually, previous lesson is having 3 parts. It is not a single video, it is 3 videos. First video we discussed about HLQ zone strategy theory session. Next 2 videos we have seen 2 examples. And look into this example. This is what the moving away from the zone. See, price reached here, and after that the zone pushed the price up, and ultimately we got a strong rejection. See the next one, again price came down, went into this zone, and now price moved away from the zone and moved up. Look into this third rejection. It also came down, and again it pushed the price up. Actually, this is the 4th rejection. Here we have 2 rejections. This is the 3rd rejection and this is the 4th rejection. Prices entered into the zone and moved away. And when it happened, yesterday it happened. In yesterday's trading, okay, if you might be watching this video after few days, you might be thinking yesterday means the day when you are watching. No, it is the day when I am recording this video. When I am recording this video, on 20th April 2024, Saturday. So the previous day, that is Friday, in the Friday trading session, see here prices went into this zone. And after that, again there is a rejection. It's a trading opportunity. How it is a trading opportunity, you will understand. If once you know the reason, by end of this video, you will understand. So this zone is a 1 minute zone. Don't surprise, it is a 1 minute zone, but the time frame I am showing you is 15 minutes. Because 1 minute chart doesn't fit within this frame. So that's why what I did, I went to the 15 minutes so that I got the entire zone, so that I get a chance to show everything here. But remember, this is a 1 minute zone. This 1 minute zone is part of a high liquidity zone. That's why we planned a trade on Friday, yesterday. So yesterday prices entered. The moment you took a long trade here, and it has given you until the next 15 minutes target. Until the next 15 minutes target, it has given you around 13% intraday ROI, a little over 13% intraday ROI it has given. Generally, the average intraday ROI we calculated so far for the last 6 months data is 6% as per one futures margin cost. But this zone has given 13% intraday ROI. That is the power of the rejections. As I told you earlier, rejections indicates a very strong order flow. See here. The price rejection away from the zone indicates a strong order flow. So this 1 minute zone is having a very strong order flow. People may think it is a 1 minute zone. Easily it will be violated. This is the way people may think. The violation of a zone depends on the strength of the order flow in that particular zone. But how do you know the strength? Rejection is one price action clue which indicates the zone is having a very strong strength. How strong, we may not tell exactly, but definitely we know there is a strong. When more and more times the rejections are happening, then we can say it is a very, very strong. See here, first time it happened, second time it happened, third time it happened, fourth time also it happened. Strictly speaking, this is actually fifth time. if you look into the 1 minute chart, here we got first rejection. First rejection here itself. So you are seeing a green candle here, right? The next candle after the zone formation. There itself it gave a rejection, very strong rejection that you can clearly observe from 1 minute time frame. If that is the first rejection, this is the second, third, fourth and fifth. These many times from the same area it is working. Definitely, one day this zone has to be violated. We have to accept that. Every zone will be violated after some time in the future. But that is all depending on the strength of that particular zone. This is super strong. This zone is having super strong, even though it is a 1 minute zone. And such kind of observations we are able to make because of this price action clue, rejection or price rejection. That's why rejections is a very, very important concept. And also it is having a wide usage in different applications that we will see during this lesson. Hope now you got the very important point. The important point is rejections indicates a strong order flow in that particular zone. Rejection means prices will be moving out of the zone with long wicks. With long wicks, see how they are moving out of the zone. Hope you got the clarity. So remember these two important points. Sometimes price rejection may not be visible clearly at lower time frames. This is also possible. But we have a trick. If you follow the trick, easily we can identify the rejections. It is a very simple trick. Changing the time frame to higher time frames might give us a price action clues. Which price action clue? Rejection. Look into this example. This is a Navin fluorine. This is also a high liquidity. This is a daily high liquidity zone. The one you have seen in the previous example, Dalmia Bharat, was a 75 minutes high liquidity zone. This is a daily high liquidity zone. Navin fluorine. We have already fine-tuned whatever the concept you learned in the previous lesson, HLQ zone strategy. Accordingly, we fine-tuned. We have identified two order flows. The thick color indicates 5 minutes and a little light color indicates 15 minutes. Even this light color indicates 75 minutes. This entire 75 minutes is inside daily zone. Similarly, here also we identified one more order flow. This is the 5 minutes zone, which is inside the 15 minute zone, which is inside the 75 minute zone. This 75 minute zone is inside this daily zone. Inside means overlapped. That is what you need to understand. But if you look into this stock, are you seeing any significant rejections here? This is a 5 minutes time frame stock. Have you seen any significant rejections from this zone? Within this fine-tuned 75 minutes area, this 75 minutes area is inside daily zone. This entire zone is daily zone and this entire thing is 75. Now prices entered into this 75 minutes area. Below, inside the 75 we have 15 and 5 minutes. Forget about that. But when prices entered into this area, have you seen any clear rejection, significant? Maybe you are seeing some small rejections here. Not great. What we are looking for? We are looking for a strong rejections from this zone. So that is what you learned in the previous point. What is that you learned? Sometimes price rejections may not be visible clearly at lower time frames. Which time frame we are using here? 5 minutes time frame. So changing the time frame to higher time frames might give us price action clues. Now you can change it to 75 minutes or you can change it to daily time frame, either one. If you change, there you may see very strong rejections. In case if you see, sometimes you may not see. If there is no rejection, you don't care about that particular stock regarding this particular topic. But now I am changing the time frame to daily. Even you can change it to 75 also, 75 minutes also. See, this is the daily chart. The same, Naveen Florine, this is a 5 minutes chart. The moment I changed this chart to daily chart, you can see like this. See, this entire thing is a daily zone. So this is a medium size drop candle. We have a base candle. These are also medium size only, but a little bigger than this. That is okay. But I don't know how many of you learned so far. There is an important point. After the leg candle, you have a base candle. If you have a medium size leg candles, you can include them as part of the base. This is a new learning for you people. Those who are following my everyday HLQ zone analysis, they are aware of this concept. Anyway, I'll be talking about all these points in a separate session in the coming days. Sometimes people might be wondering, just who recently learned the concepts? These are all leg candles. How can we place it? If the leg candles are medium size candles, you can place in a zone, provided there should be an earlier base candle should be available. So we have a drop candle, base candle is available. So that's why we allowed these two medium sized candles, leg candles, inside the zone. Now you have a large candle. So that's why this is a qualified zone. Drop, base, rally. In the base we have 3 candles. The first candle should be, definitely it should be the base candle. Next 2 candles, medium size leg candles, still they are allowed because there was earlier base candle. So between this base candle and leg out candle, we can allow these medium size leg candles. Hope I made it clear. This is one learning for you people. A little earlier I am providing you these concepts to you people. By thinking, by this time you have practiced good enough from our phase 1 and phase 2 training programs. Okay, anyway, this is a qualified high liquidity zone as per our software, identified as a high liquidity zone, and we have fine-tuned also this zone. How I fine-tuned? I explained in the Friday HLQ zone analysis video. If anybody wants to know how I fine-tuned this zone, please look into your yesterday's yesterday's high liquidity zone analysis video, because every day I am releasing high liquidity zone analysis videos. If you are not listening, from now onwards you start listening those everyday videos. You will be having a lot of learning from those videos. For the last 6 months, I've been doing this. Every day I will be releasing one high liquidity zone analysis for the learning point of view, and also to verify how our high liquidity zones are working, how powerful they are. We need to understand them. How much profits they are giving. We need to understand them. Then only we all get confidence, right? Okay. Now look into this zone. Look into this candle. There is a big rejection. So previously when you looked into 5 minutes, you didn't get clarity. That's why I told you sometimes price rejections may not visible clearly at lower time frames. Changing the time frame to higher time frames might give us price action clues. See, lower time frame you didn't have the clarity. The moment I changed it to the daily, I got the price action clue rejection. Okay, with this price action clue, what I can understand? I can understand there is a strong order flow in this zone. So that next time prices enter into this zone, probably in my fine-tuned area, maybe in 5 minutes fine-tuned area, maybe if I feel before entering prices may go up, if my risk allows, I may take my entry at 15 minute zone itself. Still my risk allows, I may take my entry in 75 minute zone itself. Somewhere in the beginning or somewhere a little below, maybe wherever, up to whichever the level my risk management supports, that level I may take in an early trade. I don't want to miss. See, today prices did not enter into until this area. Those whoever is waiting prices to reach up to here, they missed their opportunity. But we never know, there is a strong order flow. Because of this rejection, we are able to identify, so that next time we will be a little bit careful when we are planning our trade. This is how rejections are helping us to assess the order flow. Hope you got the clarity. And also you observe one more interesting thing in the same chart. See, there were rejections from the top. This is the rejection from the bottom. This is a lower wick. But here you see the upper wicks of these candles. This is the first candle. From here it came down. See, second time prices went a little above and again came down. Why? See, these lower wicks will be mainly because of the demand or demand zones. And upper wicks will be mainly because of the supply or supply zones. Definitely there will be some supply zone at this level. Because of that supply zone, and the order flow in that supply zone is very strong. They are very strong. That's why we are seeing rejections. This is the first rejection. It would have given you the clue. And if you observe this clue, definitely you would have taken another trade here. See, whoever has taken a short trade here, they would have got a very good profit. You would have taken a trade here. See, up to the next daily demand zone, prices were moved. And everything happened in 2 days. You would have got a very good profit if you would have holded your price, if you would have holded your trade to 2 days period. So now let us see if there is any supply zone at this level. See, here we have a drop, base, drop. This is a daily supply zone. From this daily supply zone, we got the first rejection. Prices came down, and see, after that next prices went down. Again prices came. In the second time, again you would have taken a trade. This time it pushed up to the daily demand zone, just 2 days. First time you got the clue. Second time, based on this clue, you would have planned a trade here. So this is one powerful concept. This is one powerful concept about the rejections. That's why rejection plays a very important role in our trading journey. Remember, rejection is a very strong price action clue. You should not forget that point. Let us look into the practical uses of rejections. The first practical usage is to assess the strength of the order flow in a zone. How strong it is, that is all depending on the future price action. But definitely initial stage, you identify. Maybe there is a rejection, strong order flow is there. Same zone, again prices are reaching, and again you are keep on seeing rejections. Then you can assess the order flow in that zone is very, very strong. That is what we have seen in Dalmia Cements example. And what is the advantage? To support multiple tests. See here, previous example. It supported multiple tests. This is the first test. This is the second test. Many people say once a zone is tested, we cannot trade. That is true in some scenarios. Definitely that is not true in some other scenarios. Rejection is one area where that statement is not valid. When a strong rejections are there, definitely it supports multi-testing. So to support multiple testing, of course, we should not take blind trades every time, but you have to do the other price, supply demand zone price action related concepts based analysis also, whatever you learn. You need to look into the trend, you need to look into the price direction, all these things you need to assess. But if it is high liquidity zone, against to them also it will work, as I explained you in the previous video. That is last Sunday, whatever I explained in the theoretical session, I clearly explained. High liquidity zones works against the trend. It works against the price direction and also location, that is curve. And the next usage, practical usage is to support aggressive trading in HLQ zone strategy. So what is this aggressive trade? This you will be learning in your next video, next lesson. Just remember so far the usages. Once after I release the next video, you will be able to understand. And the next usage is price rejection is the reason behind the pierced zones. You are all aware of pierced zones. What is the pierced zones? Price moved out of the zone. Again, while closing, prices came back and closed inside the zone. And that happens, that scenario happens only in case of rejection. Without rejection, the zone won't be a pierced zone. If a zone is a pierced zone, means there was a rejection in the candle. Who will be the reason behind that? This is the question you should get in your mind. The reason is institutional traps. So that's why the rejection concept based on the pierced zones will help you in identifying the institutional traps. Institutions sometimes will try to trap us. How they will try to trap us? That is what you will be learning in the institutional traps, the bull traps and bear traps. So in the coming lessons, you will be learning that as part of this lesson 21. Now all these videos are part of lesson 21. See how much usage rejection, practical usage rejection is having. That's why rejection is a very, very important concept. So in the upcoming session, you will be learning aggressive trade with HLQ zones. See, that is what one of the uses of the second point here. To support aggressive trading in HLQ zone strategy. So next video you will be learning aggressive trade within HLQ zone strategy. Okay, after that, after completing this lesson, you will be learning one more bull or bear traps. See, that is what you have seen here. The last point helps in identifying the institutional traps. So all the important concepts are having dependency on the rejections. And without the help of the rejections also you can identify the traps. But with the help of rejections, identifying the traps is more stable. But anyway, we will get into those details once we get into that. This is not the right time to get into those details. Unnecessary confusion will be added. But just remember, these are all the practical uses, and both these points you will be learning. And this point is very simple. Already you have seen. One example already you have seen. First point, multi-testing because of rejections. See here, first test and second test. And also previously you have seen Dalmia. In Dalmia chart example, there it has given you 4 or 5 tests we have seen in 1 minute zone, right? So this is about rejections. If you are having any questions regarding these concepts, please put them in the comment section. I will try to address. I hope I covered all the points in detail. So let us all meet again in our next video, that is about aggressive trade within HLQ zone strategy. When I will be releasing, I don't know. If I get a time, I may release before next Saturday itself. If I release, please observe. I am releasing your lessons. Don't wait till every day. At least see what is happening in our Telegram channel. Keep an eye. Otherwise, sometimes unnecessarily you miss him. Very important. HLQ zone strategy is the top most important lesson in our entire course, because that is the one giving us the maximum money. You attended Saturday video and just forget Sunday's video. Of course, it's not your mistake. You are thinking every day, only Saturday, only video will. That is not the case, I want to tell you. Why I am releasing on Saturday, weekdays I am not getting time to prepare the presentation. Last week I got good time. So I prepared my presentation, and again Sunday itself I released 3 videos. So please complete them. Don't forget to attend HLQ zone strategy video. It is a compulsory video for every trader. HLQ zone strategy. That is only like money giving strategy. Of course, other strategies also will give, but HLQ strategy is the ultimate because of in terms of the success rate, in terms of providing the ROI during intraday. Okay. Hope this information will be useful to you. Let us take a break here and we will meet again in our next video. Thank you.